Okay, so let's start this webinar. Thank you everyone for being here, to all the attendees that are still connecting, and thank you very much to our speakers and panelists today. This is the third webinar of our autumn and winter webinar series of the Open Embedded Insurance Observatory. Today, we will focus on the applications, challenges, opportunities of embedded insurance in the retail market. So in the market where the final customers are people, families, not businesses, basically. We have an incredibly good line out of speakers from insurance companies, insurtechs, distribution partners. So we will be able to get an overview and points of view on embedded insurance from all the three key players of embedded insurance, that are the providers of insurance capacity, the distributors, so those non-insurance companies that offer embedded insurance to the customers, and the organizations that we define the enablers. So those companies that through their technology and or their capabilities in data and analytics enable the implementation of embedded insurance. I don't want to go too long with this introduction. I will go straight to share with you the agenda of this workshop, and then I will introduce the first speaker. So we will have 4 keynotes from in the sequence is Gonzalo Rodriguez from Generali, Chris Pedak from Lamy Direct, Patrick Novak from Solers Consulting, that will share the stage with Alexandra Kowalczyk from Signal Iduna Polska, and Vanessa Altricher from Kangaroo. And then after those 4 keynotes, Vanessa will moderate a panel discussion with 4 panelists, Joyce Siegel from Pattern, Eric Schuh from Element, Paulina Bucati from Insurely, and Luis Dominguez from Boltec. This is the agenda. Thank you very much again for being here, for your interest, and I will pass the stage and the microphone to Gonzalo.
Thank you, Judy, and welcome to all the attendees. I see great, almost 100 people participating, so this is great. I mean, talking about a bunch of people talking about embedded insurance, I think it's exciting. I would like to present a couple of slides related to how transforming personal lines with embedded insurance, and with one example of Generali. Just to give you a little bit of context, Generali is one of the biggest of the main insurance and asset management companies in the world, with a portfolio of circa 76 billion euros, present in 50 countries and serving more or less 76 million customers across these countries. Just to start with the presentation, I would like to start with some nuances on how digital progress and big techs, I would say, are changing the customer expectation across all the industries. That is also impacting on insurance. So now we can say that digital channels are a must. Personalization is even more important, as customers get frustrated when they don't get this personalization in the product. Real-time services are also demanded, and as well, let's say, brand ESG credentials are observed by customers. And all this is shaping the design of new insurance solutions and the way we engage with the customers. So now customers are looking even more stringently in for the best combination of convenience, flexibility, price, and trust. And I will say that embedded insurance is emerging as a perfect solution to these demands from the customers, as it makes insurance more accessible and affordable, reducing, let's say, the friction of traditional channels. Because when we talk about embedded insurance, the products are not sold, but it is native within the value proposition of the partner. So this is important. Also, embedded insurance contributes to financial inclusions as potentially can reduce the insurance gap among society, providing to the people peace of mind to plan beyond day-to-day and protection as well against some financial difficulties. And I will say this is even more relevant nowadays with this fragile situation and world crisis. And as you can see in this graph, since about 2010, I would say the global protection gas has enlarged across all geographies, and the trend foresee high in the coming years. So again, embedded insurance is also a perfect way to provide these financial inclusions to all customers. And I brought an example from Portugal, where there is a huge growth within the health insurance market, but still with the room to increase its penetration in the market. Also some nuances about what customer wants, because 7 out of 10 Portuguese do not have a health insurance product, but even more important, I will say, is that half of them wants to have one. And all these customers are not targeted by traditional channels, but we can access through innovative models, of which B2B2C or embedded insurance are a perfect tool to access to these customers. In general, in Portugal, partnered with MC Sonai. MC Sonai is one of the main food, retail, health, and wellness conglomerate in Portugal. Also well-known brands such as Continente, Hypermercat, Go Natural, Health Food. Also wellness. Well is a health, well-being, eyes, and dental care brand within the market. And we develop, let's say, a new brand that encounters all the brand values from Generali and Seasonai in order to democratize the access to health and well-being to customers. It offers an embedded essential health insurance within the holders of Continental Car, and it gives access as well to a network of around 24,000 hospitals and clinics and doctors across all the country, thanks to our company as well, Advanced Care. But also the partnership promotes well-being and healthy lifestyle, as we are giving access to the customers to discount and benefits from the several Sonai brands to the customers. And I will say this model that combines an embedded solution, but also an opt-in, it's bringing value to the customers, but also reduce the cost of the distribution thanks to the capabilities of Sonai that also help us as well to get these economics to provide a very affordable product, because then the opt-in insurance products start from €7. It's really accessible to all the Portuguese. And I said in the beginning, this partnership reflects all the modern principles for insurance products, because it is convenient, because it's a unique proposal for the customers with free access to a health coverage that before was not an option. Also provides fair value and price to the customers, starting, as I said before, pricings beginning from €7.5 per month. It's also flexible because one of the things that when we were building the products is to avoid all the barriers in joining to this health insurance program with no exclusion or grace period. So this is also important in order to make flexible to the customers. Also, it is functional because it promotes the well-being and health lifestyle with discount and multiple brands of Sonae, but also granting the access to these medical and health network providers. And as well, it has a social responsible mission as it democratized the access to private health in Portugal, and we have a very ambitious objective to reach 1 million customers in the coming 3 years. As a summary, I would say that clients are looking even more this combination of flexibility, price, and trust, and embedded insurance is emerging as a perfect opportunity, not only for Generali, but I would say for the entire insurance industry. Also, embedded insurance is emerging as a potential solution to close the gap of protection among consumers, among people. And Generali has reinforced its commitments to further develop the B2B2C models as we are doing in Portugal with the MCA Sonae. So very brief and to the point presentation. Thank you very much. And I will leave the word again to Judy, to the next presenter. Thank you.
Thank you, Gonzalo. Thanks a lot for your presentation. Very insightful, very ambitious target, and I'm sure that you will do it, and happy to do this part of this path with you. And now we skip to the second speaker, the second presentation. It's from Chris Pedak, CEO of Lamy Direct. Chris, the stage to you.
I hope I get the technology right here. Gonzalo, thank you for this inspiring keynote, and you gave me more courage to talk about what I intended to talk this evening. Great listening to you. Hi, my name is Chris. Thank you for having me this evening. I'm very excited to be with you in this elite podcast talking about embedded insurance. Hi, okay. I think we are up and running. Together with 600,000 customers, 60 dear colleagues in 8 countries, we are Lamy. Our vision is to achieve 100% claim settlement. And to achieve that, well, we have built a full stack InsurTech, a company which is carrying an insurance license, a reinsurance license. We have a strong social marketing team, a super tech stack filled up to the rim with loads of technology and super powerful expert team in insurance, underwriting, and regulation. Let me say, embedded insurance is so strong. It is so strong and powerful. It is where the music plays and where the heat is on nowadays. It is offering at the right time, at the right place, what customers are interested, what customers need with their full attention. It can't get any stronger. All under the wings of the brand, which is offering the products and services which are covered. Still, we have to be quite careful. And we need to take care. As Rudy Giuliani, the mayor of New York, the former mayor of New York, once coined the theory of the one broken window. He observed that only one broken window in a building, which is not fixed, leads to the whole city district coming down and rotting within a year. if we don't embed if we do embedded insurance as we did it the last 300 years, people lose trust. People will lose trust and people will walk away. Let me explain. If we sign up to services and products, we expect them to perform. Get into a car at the car dealer and drive off. It is not really relevant what is in the contract with the car dealers the customer signed. Like many other products and services we purchase, we sign contracts which we can't understand. If you sign up to the general terms and conditions to Google, to Facebook, to all the other social media companies, well, with Google, you agree to terms and conditions and immediately you can conduct a super successful search. And still, these products are working immediately. Insurance is the perfect non-working black box. We sign up and later when the claim comes around, we are told that we have not read the contract, claim declined. And this is generating an enormous amount of frustration with the clients, and it is hurting the brands under which the services and products have been covered with insurance. Well, if we as brands, or if our brands are giving us the power as insurers to sail under the wings, we really don't want to hurt the customers and we must not leave them frustrated. Insurance, we need to recognize nowadays, is something which nobody wants, kind of a necessary evil pushed into the markets by aggressive sales staff. The salesman will not leave your sofa until you have subscribed to your life insurance contracts, promising complex products. And if you want to change this model, insurance as it is, let's follow the advice of Richard Buckminster Fuller. You never change things by fighting the existing reality. To change something, build a new model that makes existing models obsolete. Richard Buckminster Fuller. I adore him. He's a great visionary, and he had been ahead of his time. Well, what we have created is immersive travel insurance, activating and deactivating when people are leaving their home countries or they're returning to their home countries, providing services and notifications to help people for a better travel experience. No app installation needed, no complex insurance procedures needed, no worries about adequate insurance before your next trip. A 3-click activation process subscribes you to the cover, filled up with loads of tech to make the product immersive for the customer, to provide total comfort with a seamless activation process at an unbeatable price, putting the premium where customers need it into the claim settlement. Well, what a model like that can achieve is best expressed by a number, 40%. 40% is the figure that shows how effective a new model can be, because 40% of the people purchased travel insurance for the first time with us. They have never purchased before at a travel agent, totally overpriced, with an insurer, sales commission driven. So if you build easy, adaptive, to the advantage of the people, helping people instead of controlling people, this is how the embedded model can win and will succeed in the future. We need the ultimate amount of technology. Well, this shows how technology can help people and make their life even more convenient. Fast interacting APIs, data, big data, biggest data, AI, all this is needed to make people's lives ultimately comfortable and bake insurance into our lives, into our digital lifestyles. To get this done is the challenge number one. But what is even more challenging is to stay ethical. Traditional insurers, as many other companies, love taking control of customers' lives. Don't speed, don't eat, don't drink, don't sleep, don't this, don't that. Well, this is not a life I want to have. I have not planned my life to be constantly bullied by insurers. Besides, high tech deployment we need to deploy as well tech ethics to protect people. We need to adhere to digital humanism, protecting human values as well in the digital age. Insurance should serve people, and people should not serve insurance. How scary that is. And still, whatever you are, fintech, total tech, insurtech, embedded insurance, or traditional insurance, let's turn the light on. Let's make embedded insurance. Let's make the embedded insurance market an even better, shinier marketplace. Reach out, call me. Let's work together for the benefit of people. We need your support and you need ours. Thank you for your attention.
Thank you, Chris. Thanks a lot. Very inspirational presentation, and completely agree with you. We need to never forget that embedded insurance do not only provide advantages to insurers and to the tech companies that enable embedded insurance, but firstly and foremost to the customers, to our society. We know that the more a society and economy are insured, the more they are resilient, the more they are able to take risks to innovate. So if embedded insurance can help reduce the protection gap, this ultimately goes to benefit the society, firstly. Excellent. So now I will pass the stage to Patrick Novak from Solar Consulting and Alexandra Kowalczyk from Signal Iduna. Patrick, Alexandra, to you.
Hello, everyone. Thank you for the invitation to the webinar. And we're so happy to share the stage with such a great lineup of panelists. Gonzalo and Chris, thank you for your presentations. I think we will give a different kind of light to embedded insurance, as we would like to tell you a short story about Signal Iduna entering the embedded insurance market in technology partnership with Solar's Consulting. My name is Patrick Novak. I'm from Solar's Consulting, and I have a pleasure to share the microphone with Alexandra Kowalczyk.
Good evening to everyone. I'm Alexandra Kowalczyk, representing Signal Iduna Poland. I'm Director of Travel Insurance and Affinity Line, being responsible for product, underwriting, and claims handling process.
So just a really short introduction. Solaris is an international consultancy, a software provider and software integrator with exclusive focus on insurance and banking, and we operate worldwide. However, our strategic markets are Europe, Japan, and the USA.
And Signal Iduna is one of the biggest insurers in Germany, operating also in Poland, Romania, Hungary, and Switzerland. Since many years, Signal Iduna Poland develops very dynamically in health, personal accident, and travel insurance lines. In travel insurance, we cooperate closely with tour operators, providing modern and unique solutions. Actually, part of travel insurance business has been transformed into embedded as first. Our current strategy proved to be very successful as the company is growing dynamically. Basing on this, we decided to diversify by entering the P&C market in Poland. We've also decided not to go with building or using our existing sales network, but to do it in a B2B2C model.
And what I can add to this is that from the technology perspective, together with Signal Iduna, we have created a target architecture, IT architecture, that would support executing the business strategy. And the main assumption was to leave the existing core solution as it was and put an agile and light, say, API and front-end solution on top. And if we go to the realization approach to present it, let's say for the first implementation or the first partnership, but also for the next ones, I can easily use one of the slides that Yuri was presenting on one of the sessions from Open and Embedded Observatory. So This is exactly what reflects the Signal Iduna's approach. So first, in the pre-sale where all the scouting, business case creation is being done, so the commercial model is being agreed between the insurer and the distributor. Then during the negotiations, the product is defined and the value proposition is created. But the details are being agreed during inception and implementation phase. The product is designed in details and implemented. Post-sales processes such as claims, resignations are assured to put the policy life cycle in place. But here the trick is to be able to define and implement an MVP first. And exactly as in the model case, so we have this ongoing alignment and testing cycle, adapt to market feedback. We shouldn't aim at having everything in place from day one. It will probably change a lot on day two.
Yes, and after the implementation phase, we have possibility to quickly onboard the new potential partners and adjust the conditions to clients' needs. So currently we have implemented on production 2 insurance products. First one is glasses insurance with optical stores, and the second one is watches insurance with jewelry stores. And in the pipeline, we have already some other partners. The results are satisfying in area gross written premium and even 10% attach rate. The biggest benefit for client by purchasing product with embedded insurance is complex cover and, most important, fast-track claims handling process. By the claim, client returns, for example, broken glasses to optical store. Claim proceeding is automated and final decision takes just few minutes. New glasses are ready for pickup after coffee break.
Okay, so on the previous slides, we have presented the situation at the start and the strategy Signal Iduna chose, then the realization approach and the results. But in the context of cooperation between the insurer and the technology enablers, such as Solaris Consulting, it could have, of course, worked the traditional way. So if an insurer wants to have full ownership and control of the software, they can implement the software and pay a traditional license fee for this piece of software, becoming sort of an owner of it. But the approach has to be much more flexible when it comes to establishing a partnership, a longer-term partnership. And we basically see 2 practical models. So first would be a joint venture, a separate legal entity created to build a business case together by the partners. This, in our opinion, would be suitable for situations where the scale of the business is big, the investments, therefore the risks are higher, and that usually is planned for a longer time perspective. And the second model would be success sharing, so a commission-based contract between the vendor and the insurer. More suitable to cases with low initial implementation budget, but when the business opportunity is clear for both sides. It would be applicable when the scale of the business does not justify creation of a separate entity. And this is exactly the model we have chosen for the cooperation between Signal Iduna and Solaris, as it is light, fast, and allows to jointly create a great value proposition supported by modern technology. And to sum up, the Signal Iduna's approach to entering the embedded insurance market, it's in line with the following strategic process. So first, quite natural step is to look around and look for niches for the insurance offering that would be coherent with the insurance DNA, coherent with the insurance strategy. Then we should look closer into the customers of those, let's say, ecosystems, and try to set up a case for serving their insurance needs. If this homework is done, then the next step would be to gain the strategic focus by creating a shortlist of partners with whom we think the case could be successfully realized. And probably then the most important point that was already heavily mentioned in previous presentations by Gonzalo or by Chris, we need to build the value proposition that would be viable and compelling enough to support the business case. Once this is done, we need to, of course, establish some ground rules for the partnership, be it commercial or legal terms. And we need to figure out what kind of technology changes, what kind of requirements towards technology we have to fulfill so that the partnership actually is working. Once we have it, we should establish the partnership, we should build it, but having an MVP approach in mind so that we can launch it on the market, gather feedback, scale up and operate on the market. So we hope this kind of strategic process sums up well the case study we wanted to present you. This basically brings us to the end of presentation, and we're happy to answer other questions either during the webinar or after the webinar. So thank you very much.
Thank you very much.
Thanks to you. Thank you, Patrick. Thanks, Alexandra, for this presentation. And now the stage to Vanessa. Vanessa Altricher from the Chief Operating Officer of Kangaroo.
Perfect. Thanks, everyone. Since we've been reflecting the point of view from a carrier enabler, I'm presenting the opportunity of embedded insurance on personal lines from the point of view of a distributor. I'm Vanessa Altrichter and the COO at Kangaroo. Kangaroo is a security company originated from the security space with the goal to bring affordable security to the masses. Our products range from a doorbell camera to an indoor-outdoor camera, water sensors, and a motion sensor, with our top acquisition channels being mass market retail. Now, our top seller is our doorbell camera. So far, this has nothing to do with insurance, but this doorbell sells at a $20 to $25 price point. So really affordable, serving low, medium income households. Now, with that being the top seller, we thought, well, it's great that we see how packages get stolen in HD 1080p crystal clear image quality, but it doesn't actually help and solve the problems that our customers have of just packages being gone. So our head of product was coming to us and said, what if we could actually protect the stolen packages and help solve our customers' problem? We looked around and digged a little deeper and found that actually 36% of US households have experienced package theft, and that the average cost to replace a stolen package is $109. So there's a real problem there, but there's not a thing called package theft protection. We looked around, found a partner who would be able to help us launch a port protection plan. It helps or protects stolen packages for $24 a year and providing $300 worth of package theft reimbursement to our customers. Now, this is a unique plan to our customers with data that only we have, and really a product that didn't exist before. What that looks like is, again, you would buy this doorbell off the shelf in retail, download the Kangaroo app, set up your devices, and in-app you're then prompted to upgrade your plan to the port protection plan. Initially, we started at a 25% attach rate and got up to 70%. So this was really a huge success, something that just was an idea of our head of product and was then launched. And over time, we optimized what the messaging was, how we're displaying it, and helped us to increase the average revenue per user. And because the doorbell sold for $25, we basically break even, and this was an opportunity for us to have an additional revenue stream. That made us think maybe insurance and security are closer connected than we thought. And if you look around, there are actually a bunch of partnerships between security companies and insurance companies. Again, digging a little deeper, we found that you can save up to 20% on your homeowner's insurance in the US if you have security devices. That means there's a big likelihood that once someone purchased our devices, that they have a lower home insurance rate after. They can qualify for a lower home insurance rate after. So we wanted to implement home insurance quotes in the onboarding of our app to our customers. Super simplified experience, but this is what it looks like. On the left, you're being prompted to get your personalized home insurance quote. We're collecting only 5 data points and are able to return a rate instantly in app for our customers. Here, importance of API, importance of what questions and data points do the carriers need to be able to return that rate to make this experience as customer friendly as possible. The value for the customer is that it makes security pay for itself. They can save up to $350 on their policy. Our most expensive kit is probably $150, and it simplifies the buying experience. For Kangaroo, we add in a profitable revenue stream and increased retention. And the value for insurance carriers, they really want to access a low-risk customer. So we have various different carriers coming to us asking for access to our customers because they know they're considered lower risk from the get-go. It helps them to increase customer acquisition and increase the access to data. Now, we thought about taking this a level further. We have home insurance now, we have package theft protection. What about auto? Auto is a really big sector, obviously, as well. And when looking a little deeper again, we found that if you track your driving behavior with all these insurance apps, you can save up to 40% on your car insurance, auto insurance. So what we did is partner up with a usage-based auto insurance provider that lets us track our users' driving behavior for 40 to 90 days. Our users are getting a score, depending on if they're a good or bad driver. They qualify for a quote or disqualify, and are then able to buy a rate with various carriers. What that means is that ultimately Kangaroo is not just home security, but also driving safety. We offer insurance as well as micro coverage so that we protect our customers at home and on the go and cover them in case things do go wrong. Now, back to the topic of how's embedded insurance transforming the personal line space. 2 examples on our end. We are able to create a completely new product based on the data we have available and the customers, the specific customers we're serving, which is in this case, the support protection plan. And then we have the opportunity to become an alternative acquisition channel for insurance carriers. Thank you.
Thank you, Vanessa. Thank you very much. Really, really insightful. And it was important in this webinar to have also to listen also the voice of a company like Kangaroo, that is a non-insurance company that decided to offer embedded insurance to its customers. And we have seen with what results, over 70% attach rate, which is amazing, but not incredible considering the great work you've been doing. So congratulations to you. And Vanessa, I will remain with you, given you are now moderating the panel discussion that will end our webinar. So I will let you introduce your panelists and we'll let you start.
Perfect. Yeah, super excited about the panelists. We have, again, a range of different participants who are representing various different perspectives, starting off with Paulina Bucati from Insurely. She is the commercial director in the UK. Insurely is a Swedish-based insurtech startup that really enables open insurance and embedded insurance to various different digital platforms. Joy Siegel from Pattern Insurance, she's the head of underwriting there, and they create and sell embedded insurance products and partner up with a bunch of distributors. Eric Shu is the Chief Insurance Officer and CFO of Element. Element became a carrier and created over 40 unique products and has customers like Volkswagen and Vodafone. And then Louis Dominic is head of the insurance exchange at Baltic Europe, and which is a global insurtech considered a unicorn, has over 800 distribution partners, so companies like Kangaroo, and is working with over 200 insurance carriers. Now, as we've seen, embedded can change the personal line space in many different ways, from the product offering, from addressing a new audience, closing the protection gap, shifting where business is written, but also the customer experience. I'll kick it off with just taking a step back and discussing the challenges of the personal line segment currently. And Polina would ask you to kick it off.
Hi, thanks very much. So I would say one of the main challenges, or one of the main trends first observed over recent years, is a change in the way that we purchase insurance. You know, historically, this was a very labor-intensive and time-consuming process. And, you know, sometimes it even involved a trusted insurance broker that you could turn to for help, you know, for your coverage needs. I think since then, the world has obviously changed a lot. Customer buying behavior has evolved, and that's been very much driven by increased digitization, greater pressure on margins, and consumers are kind of expected to understand what insurances they need or they have. And this has created a bit of an information gap, I believe, as very few people are fully aware of their protections. You know, I'd be interested to know how many people here really know what their insurance policies, you know, are, what they cover, when are they up for renewal. We really need to identify how we can solve this as an industry together, but also perhaps from a regulatory perspective. And I think that's where perhaps embedded and open insurance can play a key role in solving some of these issues, but at the same time also helping empower the customers to make those better informed decisions at the point of purchase.
Perfect. Thanks so much. I think that was a great background, and we'll ask more questions when we go. I think a big part is data. Data enables us, data that the distributors have enables us to create new products and simplify the buying experience. Louis from Boltec, if you could chime in, you know, these unlock big opportunities. How are you helping to make use of that data, and how is that impacting the buying experience with what you're providing?
Thank you. I think we all have use cases that exemplify very easily mean how data is benefiting the three pillars of the insurance industry, from underwriting to create new products, to claims management. But essentially in our case, because Boltec is all about distribution, we enable, you know, the offer and demand, we connect them. We have very good use cases of how data is being used to enhance, the user experience in several ways. More personalized, coverage offering, definitely more contextualized and more convenient experience. And one example that I think we are more or less all familiar with, I always use, is when it comes to sell a home protection, home insurance, the when, is one of the challenges that we are all facing, okay? And one example that we, enable in the platform is when we connect an insurer with a telco company is one of the first to know when a consumer is changing its address, because consumers call them, okay, to let them know that they need to change, their broadband connection. And then this new data injected into the ecosystem that enables, the when, the trigger of when to offer a personalized and contextualized offer. So data is very useful in distribution, and this is one of the examples that we are experiencing around the world.
Perfect. Thanks so much. Going to Eric from Element. Now, you've created over 40 unique products, which I think is really impressive. You've became a carrier. You're not just an enabler, but writing these policies yourself. I'm wondering, because I see it as a big challenge, how do you take a look at a new set of data, evaluate the risk, create a product for that set of data, and then actually launch that product? If you could share an example of how you went about that, how to evaluate the risk and really come up with a new product that has never existed before.
Yeah, so thank you. I guess we became a carrier because we needed to become a carrier. We felt, at least, to be fast enough. It was a speed decision, because if you cannot carry the risk yourself, and it takes much longer to launch the product, right? You need to have certain end-to-end capabilities. I think it was wrong. A lot of people, us included, or many of us included, thought that the industry is going to atomize itself into value chain steps. We now see very clearly that you need to be able to offer a seamless experience to your partners, especially if we talk embedded insurance. These are powerful platforms where the clients or the customers who are on these platforms or in these ecosystems, if you want to use the word, expect something to work seamlessly. And so basically, when it comes to data, the paradox is that you get the data from these platforms, good data, but usually it's not exactly that data that you need to make an underwriting decision traditionally from an insurance company's perspective. So that you need to be flexible enough to use that data in real time and dynamically to create an insurance product also dynamic, because you need to be able to issue a policy in real time and things like that. Even though actuarially speaking, this might be a bit uncomfortable, right? And you might have actually data gaps where you would have had the data, but you're much faster. And this is a little bit the trick here in our experience. And you mentioned Vodafone and Volkswagen earlier. These are two examples where we did that for short-term driver's protection. If you drive somebody else's car for a test drive, you can issue the policy based on a few entries very quickly, and then off you go. And for Vodafone, we have a private cyber policy out there where you just need to enter your phone number, and then it's all like basically deducted from your phone bill and all that. And I guess the key points are end to end. You need to work with the data that's available and be able to have the capability and competence to create an insurance policy out of that. I think that's the key, and that has to be fast. Speed is a bit of the essence here.
Thank you. I would say, on the contrary, there's also pattern insurance. You're creating the products yourself. Pattern works with reinsurers and insurers to source those products, but still helps to create unique offerings for the distributors you work with. Joyce, would love to get your input on how do you overcome maybe the pace in which some of your providers work, and how are you able to create those unique products?
So I think so Pattern has the unique capability to involve themselves in the customer experience and fully embed an insurance and protection offering that suits the needs. So we aren't dependent on a product, but a bundling of products. So we will look at kind of the uniqueness of the situation and determine what it is that the potential consumer may be most concerned about. So one of our most recent offerings was related to outdoor bookings. We can provide a standard travel insurance product, but it became very obvious that people that book an outdoor experience are concerned about rain. And so we're able to generate a real-time AI focused probability of a rain event for somebody's proposed vacation, and give them the opportunity to accept an offer for insurance that allows them to cancel their vacation based on a forecasted weather event. And we can use this outside of rain. Think anything that's verifiable: snow, wind, any combination of those, air quality. And so we're able to use that in conjunction with other offers to build something, not just depending on what exists in the insurance ecosystem to put out an offer, but to be creative.
I think that is really impressive. I mean, the whole opportunity of parametric insurance products deriving out of this, like you're doing, compensating someone if rain is there and you're tracking that data and then paying someone out. That's really such a friendly customer experience. Now to next question, what opportunity would be unlocked through the use of open insurance data? And maybe Paulina, if you could elaborate on what open insurance even is. I think that's a good point to touch on it here.
Yeah, absolutely. So, open insurance enables the sharing of personal and insurance data between insurance providers and third parties. And that's achieved by setting a minimum API standard, which is mandatory for the industry to implement. Providers will need to develop open APIs under regulation, and they will need to offer transparency throughout the customer's journey. So at the moment, there are, regulatory bodies in the EU and in the UK that are very much focused on open finance development. The FCA is already in the process of setting out a draft legislation and regulation that will actually mandate open finance implementation. And I believe that's somewhere in the second quarter of next year. For us at Insurely, we've built the infrastructure to already facilitate the sharing of data without the need to wait for regulation changes. And this is all obviously done with the customer's full consent. So we're fully in line with local regulation like GDPR. And we want to help companies be ready for when regulation does come into practice. Open insurance data will also give industry players the chance and the push to offer consumer-centric functions, of which one should always be, to make sure that your customer actually needs that policy and that you're not over-insuring themselves. It allows consumers to better understand their current insurance position. And they could do that by, collecting their real-time policy details, identifying any coverage gaps, and thereby allowing them to make more informed decisions whether or not they need the additional coverage that's being offered to them. To me, that is full consumer centricity, and it's exactly what I think the industry should strive towards with the help of open insurance data solutions.
Thank you. I think it's a good point on the impact also on the customer experience. I want to stay on that topic and kind of where that starts and stops. As Kangaroo, as an example, the buying experience actually doesn't happen within our app. It happens elsewhere. So would love to get, Lewis, your perspective on what is considered embedded, where does it start and stop, and how does that shift where policies are being bought?
Well, it's a very, open question, but because as I said at the beginning, in simple terms, I think we can embed a better, insurance experience in all the three key pillars of the model, from underwriting to claims management to distribution. When it comes to distribution, for us, basically, where it starts is always with the perception of the consumer. So in general, there is, only one thing that matters, that is, when the consumer has a high value perceived, value proposition. And when it comes to insurance distribution, it's about the relevant protection. So when you embed a relevant protection into the customer journey, and the experience is better. So as before, trying to bring this to a concrete example, okay, so if you are buying your new mobile device, okay, if you are offered a mobile device protection, screen protection, threat protection, damage protection in general, okay, this is very relevant. So you are not being offered with a travel insurance protection when you are buying, a mobile device. Okay, that's very obvious, but I think very important. There is always, a logic to it. And then secondly, if you are offered a bundled product where you get the protection, in combination with your main product, definitely, you provide, a great value proposition. So that's, I think, a good example.
That makes sense.
I would also add that one of the great things about a truly embedded experience is that much of the information that's needed to provide an insurance offer resides in that channel. And that also makes it a great customer experience. So we don't need to re-ask the questions. We know who they are, we know who they live, we know the price of what they're buying, where they're headed to, or a bunch of other pieces of information. And that adds to the customer experience and the value of embedding the product.
Absolutely. Thanks for adding that. Now, I feel like embedded is often only considered digital. We almost forgot about all the digital experiences that were already embedded and existed for many, many years. So for Eric, wanted to ask you, how does the human interaction fit into the embedded play? Let's say someone buys certain policies online. What is the role of an agent? How do they fit into this equation?
Yeah, so I think embedded insurance is not the same as online direct sales, obviously not, right? Embedded insurance is about the insurance experience being part of something else, but also not fully integrated, right? So it's not like it comes with the product. That exists too, but that's not what embedded insurance is. And it's also not pure affinity business where you simply, team up with somebody. My example on that has always been USAA as one of the most successful insurance companies in the world, who clearly has an affinity to a certain clientele in the US, and built an entire insurance business around it. That was way before embedded insurance. And I think the human interaction now comes with, by definition, you know, embedded insurance is part of ecosystems of platforms. The relevance of embedded insurance, why 400 people meet on a call like this, is that it's growing. It's growing big time. It's not a niche anymore. It is a segment, and it is growing. It will become, depends on who you believe, right? 20, 30% of the overall market. And that is the relevance. It clearly is going where the people are. And similar to, I don't know, Starbucks embedding itself into a mall in the old days, right? Nowadays, we're already beyond that. But back then, they would simply go with their coffee and scones on to where people go shopping. Very different from the coffee you get served in a high-end store with your expensive purchase. That would be integrated, right? So you can see that everywhere it's the human touch. And what I think is, as a last point, maybe what is one specialty about embedded insurance is that it's often similar to or related to white labeled or white labeling. And therefore, it can piggyback on the brand that it embeds itself into, which might be stronger than the insurance brand. And as we know, insurance is usually not the purchase where people, you know, are in the flow of happiness when they do that. But if the brand, and that's why you need brands. The brands give you the confidence that it's okay, right, to do that now. And if this is a strong brand, you know, this is all about human behavior and willingness to protect yourself with a good feeling. So in summary, in our experience at Element, while we are a fully cloud-based insurance company, and we don't do anything on paper and call centers, the sales and reasons why people purchase embedded insurance might be even more human than for traditional insurance.
Thanks. Yeah, good. On that point, I would like to ask Polina, you know, branded versus not branded, white label, to what you spoke about, Eric. Are people propense to buy insurance products from non-insurance brands?
I would say it really depends on the parties involved and the brand recognition of the carrier and the distributor. It also depends on the value and importance of what you want to insure. You know, the customer needs to have trust in that brand and needs to understand the full value that they're receiving. So there needs to be clarity of exactly what the cover includes, and also the services that are associated with it. You know, in a world where there are complex products that we don't fully understand, brand is really important, and it's key since you're buying a sense of security to some degree. You know, there's a large concentration of large brands selling specific policies because people trust them. But the world is changing as well. You know, people expect more digital services. And I think the new generation tends to put more weight on a simplified customer journey than that of previous generations. And so maybe for new generations, I don't think, I think they're maybe less brand sensitive. You know, they'd be much happier using a nice app or a digital friendly interface, allowing them to experience a seamless, fast customer journey. You know, that's more appealing to them than a company who, you know, although they might have a strong brand, they might have a really poor digital service and expect customers to answer anything between 30 to 40 questions to get a quote. So, you know, I think there's a lot of value in big brands investing in digital technology and development, you know, especially if they have a strong brand. You know, they want to retain their customer base, and they also need to move forward with the times as well.
Perfect, thanks. Yeah, we've been thinking about it very similar. Would love to go to the next question and the next segment. Ultimately, how is open insurance and embedded insurance making it more accessible and transparent, and really focusing on the word accessibility? Gonzalo has already shared that we're closing the protection gap. More and more people are insured. Would like to start off with Joyce. I think something that personally I've been observing here in the US is that many carriers pull out of the states of California and Florida. And even though we're selling home insurance and app, it's a real problem that customers have a really hard time accessing, you know, home insurance offers in those two states. So to me, it's not actually closing the protection gap. There's a big gap right now being created. So Joyce, maybe getting your take on To which extent can embedded insurance help close the protection gap, and what does that look like?
So from where Pattern is focused, we're not in the traditional mandatory coverages such as auto or homeowners, although our platform is agnostic. So, you know, an embedded solution in the technology would allow the reaching out, you know, to provide the right partnerships and offer a coverage. Where we're seeing protection gaps in non-mandatory coverages is around education, around people understanding what they need and being offered something at the right time. Most of it's around customer experience, but the lack of information causes people to misunderstand why they may want a particular coverage, and being readily available there to provide coverage that's tailored to their particular experience and their booking gives them an opportunity to learn more and not deal with a cumbersome quoting process.
Perfect. Maybe, Louis, if you want to chime in, you shared something really interesting when we spoke around, you know, how it can be made more accessible by actually some carriers choosing to not take on risk themselves, but transfer it to others, but still write that customer. If you could
agree. I mean, there are models where carriers are offering coverage from another carrier if they don't have an available coverage, right? So if they're not writing in a state, I mean, to answer your question about data and data availability and how this can really help with increased access, I think, you know, some of the limitations in the US are related to carriers' inability to get the necessary rate increases to support, you know, climatic changes and things, you know, catastrophic situations. The data from the open and embedded platforms will help inform regulatory changes in coverages and rates, but it'll be a long haul. I think in the meantime, it's more of what you're referring to, which is accessing available coverage from other partners to provide to a consumer.
Louis, did you want to add something to that?
Well, I'd say we are a living experience of that. Okay, our platform enablers access to, I mean, you know, to consumers by connecting insurers with distribution partners. In the case that you have mentioned, that internally we call the waterfall model. Basically, our platform enables, you know, whenever an insurer, I mean, doesn't have the appetite for a given risk or even don't underwrite a given risk. So, for instance, we have the case of an auto insurer, tier 1, that of course, I mean, is not underwriting risk for home protection or travel or life. However, they trust in our platform, I mean, to get connections with other insurers in a competitive model where everybody wins. I mean, the consumer gets the protection without leaving the dominion, and of course, the insurers get, I mean, one of them the commission, the other one underwrites the product. So I think it's there are living cases. Not so extended still in Europe, but definitely in US ahead of the game. Yeah.
Perfect. Thanks so much. Next question to Eric. I'm reading a lot that, you know, embedded insurance enables to lower the customer acquisition costs, that those savings and costs are basically translated in savings to a premium, and in that way, the policies are made more accessible. It depends, right? And love for you to chime in on that.
Yeah, I think you said it. It depends. It depends on also what you want, because if we talk about embedded insurance, it's often a partnership, right, between an insurer and somebody else. And if you think back of the bank assurance experiences we all have, do you want to use insurance as a cash cow and tender out the privilege of selling to the bank's customers every 10 years for the maximum commission? Well, then what you get is a product that might not be optimal for the client because it's optimal for you as the bank. However, if you want to be strategic and delight the customer as a bank, and you don't want to make a lot of money out of that product, for argument's sake, maybe you can have the perfect product for that customer. So from an embedded insurance provider's perspective, and we do not just do embedded insurance, but what we do as a B2B insurer and white labeling insurer, we usually offer our product at a net premium. That means we calculate it and we offer it as a package, and then you as the partner can decide how much commission for the distribution you want to earn on top. So it's a choice, you know, how you want to treat the product. Do you want to treat it as something to pay the bills with, or do you want to treat it as something that pays into the, let's say, the overall platform economics or your customer? And I think the latter has proven a pretty big growth case, if you're asking me. The cases where people thought the insurance could just take away all the problems because it's extra money and so on, I think are fewer than the ones where people brought together the pieces and 1 + 1 equaled more than 2.
Yeah, very good point. Also, because it so much depends on what that distributor is actually looking for. If they want to take in all the revenue, provide no savings, basically additional savings to the customer, or not. Totally agree.
And
now,
sorry for Vanessa, just to chime in, maybe I should have made this very clear that, of course, the demand on a provider like us is efficiency as well. We need to have the capacity and the efficiency to make this possible, that it can also be a price sensitive product. So what in the old days used to be the whole thing about digital insurance platform, this and that, this is table stakes, right? You need to be able to do things digital end to end at a very reasonable price. So I just didn't want to emphasize this because to me it's clear that everyone needs to be able to do that nowadays.
that's true. Next question to Paulina. I'm wondering which non-insurance companies are actually a good fit. So if you're going out to potential distributors, potential customers, who do you think is the best fit for actually embedding insurance products into their non-insurance offering?
Yeah, I mean, from our experience, I think banks are a great example. You know, they already are offering the vast majority of services for your personal finance needs. But when you consider it, not all of their customers will need a mortgage or need a loan, but all of their customers will need insurance in some shape or form. With few exceptions, the bank assurance model hasn't always been that successful, often due to a lack of, efficient and relevant distribution channels. But with embedded insurance powered by open insurance data, we can actually help banks leverage their customer base, allowing them to add a value proposition in their own environment. So, for example, we offer solutions that enable consumers to collect all of their insurance policies and have them displayed within a banking app. And through that, the bank can create a much more comprehensive and holistic overview of your personal finance. And they can even perhaps, challenge your current insurance policies. The process also allows policyholder data to be auto-filled in the embedded solution, so it enables a much smoother customer experience. It's timely, it's relevant, and it's really in line with the modern customer's expectations. Banks are one of the most important distribution channels for insurance. They also offer insights into relevant life events, like buying a house, getting married. So they are actually a great fit. And one of the key learning metrics for banks is return on equity. And when times are tough, like, in the current environment, return on equity is getting pressured. Selling insurance doesn't require any equity or capital by the bank. So, this is like a new revenue stream, and, they're constantly looking for new revenue streams, especially those that are recurring revenue streams. They want to diversify their income away from, interest rate or mortgage driven products. So strategic partnerships between insurers and banks is, it's existed across Europe. But there is a real need for a bit more investment and innovation, I think, to move things forward. And something that's really important as well, banks understand the value of open data from the open banking space. They've already experienced it. So they know what it means to be the first mover in open data and finance because they know the successes from that. So taking the next step in open finance, with open insurance or open pensions, you know, for example. I think we'll see the same thing happening there, and banks appear to be a bit more prepared for that at the moment from the conversations that we've been having with them.
Perfect, thank you. Makes a lot of sense. We're unfortunately at the end of the time, but wanted to thank you so much for participating in the panel, sharing your insights. I really think we had a great, different perspectives, but we'll hand it over to Yuri again.
Thank you, Vanessa, and thank you very much to all our speakers. I think we have shared a lot of very interesting insights and points of view on embedded insurance. So really, thank you very much for your time to all our speakers and our attendees. And looking forward to see you again to our next webinar that will take place the 14th of December, where we will make a wrap up of this year and look at the next year, what we can expect from 2023. So the registrations for the new webinar will open in a couple of days. So thank you very much again to all our speakers, to all our attendees. I hope you enjoyed these conversations, and see you soon on these screens. Take care. Bye-bye.
Thank you.
Gracias. Bye.
Bye.
Gracias. Ciao, ciao.